The Ethereum ETF is set to launch this week, and some analysts are saying the ETF demand could push Ethereum to $5, $10, or even $20,000 by the end of next year. So today, I'll take a closer look at the reality of these price targets. We'll look at how the ETF approval have affected the price of Bitcoin and the inflows and outflows from the Bitcoin ETF funds and what we can expect from the Ethereum counterparts. We'll cover the pros and cons of buying the Ethereum ETF from a traditional investing account versus buying ETH directly from a crypto exchange. For the true crypto natives, we'll also cover the top altcoins to watch in order to gain exposure to the renewed interest in the Ethereum ecosystem. Make sure to watch till the end, as I'll also share my prediction on the price action of Ethereum shortly after the ETF starts trading. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor for the past 6 years, and I have invested in over 100 crypto companies. On this channel, I share views on market trends and investing strategy to build wealth in crypto. Now, really brief, when does the Ethereum ETF actually start trading? A lot of people think the Ethereum ETF was approved a couple months ago already, and they think this has already been priced in, but this is not the case. You see, even though the US SEC approved the Ethereum ETF in May of this year, these approvals were actually one of 2 filings required before the ETFs start trading. So even though the 19-B filings have been approved, which means the ETFs will for sure come to market, it still takes another approval for another filing called S-1 for each of the Ethereum ETF before they can actually start trading. Now, just last week on July 8th, all 8 issuers of Ethereum spot ETFs have filed their S1 filings, which means usually around 1 to 2 weeks after that, the ETFs actually come to market and start trading. The earliest estimate from Bloomberg analysts is July 18th for the ETFs to come to the market. Starting later this month, there will be 8 Ethereum ETFs available to buy, and these are from BlackRock, Fidelity, Bitwise, ARK Invest, VanEck, Invesco, Franklin Templeton, and Grayscale. Now, we don't know the exact fees of these funds just yet. However, it's very likely that 7 out of 8 of the issuers, except for Grayscale, will have a very similar low fee like their counterparts on Bitcoin, right around that 0.25% number. So you are good to buy any of the 7 that are available to you except for Grayscale, because just like the Bitcoin Trust from Grayscale, which was later converted to the Bitcoin ETF, the Grayscale Ethereum Trust also has a much higher fee at 1.5%. So this is the only bad deal. The Ethereum ETFs will also be offered at very similar brokerages in the US like the Bitcoin ETFs. So right now, Fidelity, Robinhood, Charles Schwab, E-Trade, etc. all offer spot Bitcoin ETFs, and these will most likely have Ethereum ETFs as well. Once the official tickers are live, just go on your favorite broker like Robinhood and search up your ticker name. Now, really quick, I want to give you some pros and cons of the Ethereum ETF versus buying real Ethereum. The benefits of buying the ETF is, number 1, there's no complex self-custody for a crypto beginner. Number 2, you have insurance on your funds because these are regulated. Number 3, you do have exact exposure to Ethereum price, since all the ETF shares need to have 1-to-1 value backing of real ETH coins. This is much better than before with Ethereum Futures Trust. And number 4, there are very good tax advantages with Roth IRA or 401k accounts or any retirement account that you may have. You can put those funds also invest them into Ethereum or even Bitcoin ETFs. On the other hand, the disadvantages of buying the ETF versus real Ethereum is that, number 1, you don't have real custody in case you are a crypto purist, or if you are worried about your freedom or bring your money anywhere you want to go with just a hardware wallet and a seed phrase, then you cannot do that with regulated fund structure that only exists in the US. Number 2, you have no staking income, so you're giving up at least 4.4% of extra rewards per year. And number 3, you don't have any DeFi income from lending, liquidity provision, etc. So I estimate the total opportunity cost, including staking and DeFi, is probably around 10% of extra yield that you can get by buying real Ethereum and deploying it versus buying the ETF through a traditional broker. Okay, next up, let's look at how these Ethereum ETFs can actually impact the price of Ethereum. And specifically, we need to look at the inflow-outflow estimates that institutions will get in their money into Ethereum. So is there any data that would suggest how much money will flow into Ethereum from these ETFs? The answer is yes, and Galaxy has done a very good research piece to size the market for the Ethereum ETF. So we're going to take a look at this very deep. So a quick refresher, since the Bitcoin ETF launched on January 10th, there have been a large inflow of new money coming into these TradFi instruments for Bitcoin, specifically around 15 billion total. So the basis of this research is using the inflow from institutions into the Bitcoin ETF and comparing that with the market size of Ethereum and the demand from institutions into Ethereum versus Bitcoin to determine roughly how big of an inflow can we expect over the next few months into Ethereum ETFs. So first, why is this important really quick? Over the past 6 months, there has been a very positive correlation between the price of Bitcoin versus the aggregated ETF inflows. This is the chart on the left here. You see, as the blue part started to rise, which is the total amount of money flowing into the Bitcoin ETFs, so did the price of Bitcoin, going from 40K all the way up to 70K. And on the right side here, you have a correlation analysis. The two are heavily correlated, which means the ETF demand is clearly driving the price of Bitcoin. What is the price, right? More buying leads to higher price. So here is a table comparing the demand for Bitcoin and Ethereum across a few different metrics. Number one, we have the market cap. So Bitcoin currently trades at around 3x the market cap of Ethereum. And then it's also important because we're dealing with ETFs, which are institutional investment products. We need to look at the futures products in the US and the fund structures in the US. So across all of these numbers, Galaxy have done the research comparing essentially the total amount of money that's deployed into these institutional products that have existed for a very long time in Bitcoin and in Ethereum to determine how many institutions are looking to deploy how much money into Bitcoin and into Ethereum and figuring out a ratio. And you see these ratio range from as low as 12% of money deployed in Ethereum versus Bitcoin to as high as 57% with, for example, futures trading volume. And at the end here, you have some averages. So the average of all the futures trading is around 52% of demand in Ethereum versus Bitcoin. And the average ratio of funds in Ethereum versus Bitcoin is at 26%. Then you take the average overall of all the metrics here, you have the total demand. So the overall average of demand for Ethereum versus Bitcoin is around 31% of demand, which means the market size of institutional demand for Bitcoin versus Ethereum is about 3 times larger. With that number, then we can do some estimates. Because we know there has been $15 billion of inflow coming into Bitcoin from US institutions over the last 5 months. That's annualized at 35 billion per year. And taking Bitcoin to Ethereum demand ratio of 3, that gives us 11.8 billion of net inflow per year, which is roughly $1 billion of money coming into Ethereum ETFs per month. Honestly, I really like this approach. It seems very practical and gives a real number that we can expect for the amount of money to flow into Ethereum, which we can use as a benchmark and to monitor what actually happens when these launch. Now, I don't think this means necessarily Ethereum will see a price increase straight up from the ETF starts trading, because even on the chart of Bitcoin, we also saw an initial dip period, mainly because of the outflows coming out of Grayscale. So another refresher here, as you can see on the Bitcoin ETFs on-chain holdings chart here, the largest portion in purple is from Grayscale. Notice how since the ETF has launched, all other issuers have seen increase in the amount of Bitcoins that they held. However, the amount of Bitcoin held in Grayscale actually continued to go down. This is because Grayscale has had this other format that's been trading in the US for a while called the Grayscale Bitcoin Trust. This was a closed-ended instrument that has very high fees and no redemptions, which means it wasn't ideal. So a lot of people actually bought into this instrument before with the intention of withdrawing later on to take advantage of the arbitrage and converting the Grayscale ETF into other institutional ETFs once they come live. This is why during the first couple weeks, there has been a pretty significant scare after the Bitcoin ETFs launched, because people were saying, oh, the ETF actually wasn't driving real demand because Grayscale was heavily selling. Now, Grayscale also has an Ethereum trust with a very similar format, and it currently holds $9 billion in asset under management. This is pretty significant. And with the Grayscale Ethereum trust discount ratio, we also see that this discount has essentially disappeared at negative 0.5% only, which means a lot of people have bought up this before the ETF launch as well. And a lot of them will likely convert this into other ETFs. So I wouldn't be surprised to see a very similar scenario where the ETFs for Ethereum start trading and we get some surprise FUD news again, where it says Grayscale is heavily dumping Ethereum. But in reality, we see shortly after that, BlackRock and Fidelity and other ETF issuers start to pick these up. It's also interesting to note that unlike GBTC or the Grayscale Bitcoin Bitcoin Trust, the Grayscale Ethereum Trust does not have forced sellers coming from bankruptcies like 3AC, Genesis, FTX, etc. So this could alleviate things a little bit. Maybe we see this event getting priced in much sooner. So TLDR around Grayscale is that the Grayscale Ethereum Trust will also likely see significant outflows going into other funds because it's a closed structure and it has much higher fees. So the conversion arbitrage will be taken advantage of. So be careful right around the Ethereum ETF launch week. If you see FUD around this, just hold your bags because this is only a short-term event. There is one other caveat that could decrease the demand for these Ethereum ETFs, and that is around staking. Like we've just mentioned earlier, there is around 4.4% of annualized staking rewards that is foregone by anyone investing in an Ethereum ETF versus buying Ethereum directly and staking it. This is because even though the US regulators have approved the Ethereum ETFs, these ETFs cannot have staking built into them. In fact, the SEC is currently undergoing a full lawsuit against Consensus and MetaMask for offering staking services. And this also applies to other Ethereum staking services like Lido and Rocket Pool. This battle needs to be resolved before staking is eventually added into these Ethereum ETFs. So this could mean if any institution is specifically looking at Ethereum as a more productive asset, if they are more attracted to the staking income of Ethereum like a productive business, then they might not be as attracted to the Ethereum ETFs and might have to wait. Lastly, how big of a price impact will these ETF inflows be for Ethereum? Well, we can take a look at some of the available supply data for Bitcoin and Ethereum to see this. So aside from the current market cap of Bitcoin versus Ethereum, which is about a 3x ratio, we also have some adjusted factors, namely around staking, around lost supply and supply locked in bridges and smart contracts. A big difference between Bitcoin and Ethereum is that Bitcoin does not have smart contracts or DeFi, which means there's no staking, there's no amount of supply that's locked up. The only supply that's out there is all the supply that's circulating, and they are mostly all circulating until they are lost or burnt. So you see here, even though Bitcoin has around 16.6% of the supply that's dormant or lost forever, whereas Ethereum only has 6.7%, when looking at other areas like staking and supply in bridges and smart contracts, Ethereum actually has much more supply being locked up. So you see around 27% of Ethereum is already staked, which is unlikely to move, unlike for Bitcoin, it's around 0. And the amount that's locked up in bridges for Bitcoin is only 1.6%, but on Ethereum, it's 11.4%. After applying some discounts, we come to these total adjusted circulating supply for Bitcoin and Ethereum. And you see here about 8.7% of all Bitcoin is locked away, whereas on Ethereum, there's 14.4% of all Ethereum that's locked away. So the summary of this part is that there is a higher percentage of Ethereum being locked up versus on Bitcoin, which means the price sensitivity should be greater for Ethereum compared to Bitcoin coming from these ETF inflows. So now let me give you my prediction for the price of Ethereum shortly after the ETF starts trading. First, let's look at the price of Bitcoin after the ETF launch. So the ETF launched on January 10th of this year, and right after that, Bitcoin actually saw a pretty significant drawdown here as a sell the news event, going from 46,000 all the way down to 38,000, a 15% drop. I expect we could see something similar, especially if Grayscale starts dumping and the FUD comes out. But I do expect this to last a lot quicker because people already know how this is likely to play out over a longer term. So I don't think there will be a 2-week long drawdown period, maybe something like 1 week and around a 10% drop. So I wouldn't worry about that too much. And instead, we should look at how long it took Bitcoin to fully price in the upside potential in the next few months. So you see here, after the ETF launched, 65 days after that, Bitcoin reached an all-time high of $73,000 with a price increase of 58%. And it has maintained around these levels from the 60-day mark all the way to the 150-day mark. So between 2 and 5 months after the ETF launch. If we extrapolate these numbers on the price of Ethereum, here's what we get. So starting from the launch date around July 18th until the next peak around 2 months away, that is in September, late September of this year. And if we get a 58% increase, that brings the price of Ethereum to $5,300. So this is my most bullish estimate. Ethereum could reach as high as $5,300 by September 20th of this year. Now, a more conservative target that's more likely to come true is for Ethereum to actually reach these numbers in this range period between that 2 to 5 months mark. So I think think what's much more likely to happen is for Ethereum to at least reach these levels between September to December of this year. These numbers also match my medium-term expectations that I made last month when we were looking at the Bitcoin price action after the Bitcoin ETF approval and looking at the ratio of Ethereum versus Bitcoin and how it's been performing for the past year. And if there is a catch-up trade, how likely is that to play out? And what's the actual target? So you should check this video out for the Ethereum ETF approved video that I made last month. TLDR is that in this video, I expected Ethereum to reach $6,000 by the end of this year, which is right in line with that $5,300 target in Q4 of this year. And if these numbers actually play out, then we can look at my long-term price prediction for Ethereum, which goes all the way back to last year, 10 months ago, when we looked at all the catalysts coming for Ethereum, such as positive Ethereum regulation, Ethereum Layer-2s, Ethereum account abstraction, Ethereum staking demand, as well as the Ethereum ETF. So in that video, I gave a price prediction until the end of this bull run based on the target for the total crypto market cap around 10 trillion. So in the end, I expected Ethereum to reach somewhere around $15,000 to $16,000 by end of 2025. And we will be right in line with that as well. You should check this out for a longer term outlook. Okay, so if we see a renewed interest into Ethereum, what other ways can you get exposure to this? Are there any altcoins that you can potentially get positioned in right now in order to gain exposure? Well, I think there are a lot of good choices here that are all heavily undervalued right now because, well, Ethereum just hasn't been popular for the first half of this bull run. I think there are 5 different categories here that I want to mention. So number 1, we have the liquid staking projects on Ethereum. These are names that you all have heard before in the last couple of years, but they have quickly fallen out of fashion in the past couple months. Lido, Rocket Pool, Mantle, these are all some of the market leaders in Ethereum liquid staking, as well as EigenLayer. Once EigenLayer actually comes to mainnet and launch their token, their ecosystem with restaking projects like Kelp, Renzo, EtherFi, these are also going to be very popular as well. Then we have some of the core Ethereum infrastructure. A very interesting one here that I think is very different is Ethereum Name Service. This is a product that specifically serves the Ethereum ecosystem. Ethereum is even in the name of this project of ENS. So I think this undoubtedly will be a very clear beta play to the price of Ethereum. Some other ones that I think is actually heavily underlooked right now is ZK Sync. I know a lot of people will hate on this project and say, wow, what a disappointment. Especially because of the disappointing launch, I think this has a lot of potential because I am still a big believer in the technology of ZK. And considering how big ZK Sync actually has an ecosystem and how many chains are actually building using the ZK technology, and the fact that they have raised over $400 million, while the current market cap is trading fully diluted at 3.5 billion, I think this is quite undervalued here. Looking at this chart, pretty much flat as well. So undoubtedly this will have a run up probably in the second half of this bull run. Another very similar example that's already starting to run is Layer-0. This is the core cross-chain infra for the entire Ethereum ecosystem. Again, very heavily hated launch because of the timing of it, because of Ethereum falling out of fashion. But I think this one will honestly at 3.9 billion is also very heavily undervalued. Couple other examples here in Ethereum Layer-2s that are not as heavily undervalued. Arbitrum, Optimism, obviously people already know these two coins. I think they are still kind of fairly valued at $6 to $8 billion. So I wouldn't hold them too much, but I think these will also rally once Ethereum starts rallying. What's much more interesting to me is the newly launched Layer-2s in the second half and Q3, Q4 of this year. So mainly these are Linea, Scroll, and any other ones that may launch. The fourth category is Ethereum DeFi coins. I know these are all legacy coins. People really have been hating on these because they just do not perform. But if we see renewed interest in Ethereum, these are the most direct ways to get exposure to the Ethereum ecosystem. So very simple, you just go on DeFi Llama and look at the Ethereum chain and which are the top DeFi protocols on the chain. And we have a few that we have already mentioned, but the other ones that we haven't, MakerDAO, Aave, Uniswap, Ethena, Pendle, these are all good choices. Lastly, if you are really into some of the more popular, so-called community coins, you could just go for Ethereum-based meme coins. And these are some universal bets that I think a lot of people will appreciate. So meme coins on Ethereum, people already know, PayPay, for example. So one way I like to do research on meme coins for Ethereum is to look at the Uniswap trading pool volume and liquidity. So you go on CoinGecko, you go on decentralized exchanges and look at Uniswap V2 for specifically Ethereum chain. Here you can rank the percentage volume, per day, and also rank by the percentage depth. So these two metrics is really important because these directly show you what are the most popular coins that are trading on-chain on Ethereum only. And it shows you what are the most liquid coins that's supplying liquidity on Ethereum that you can only access on Ethereum. So by looking at these two metrics, we rank them and we see some of the coins that are on here that we haven't mentioned: Pepe, Flocky, Mog, Beam is a gaming coin if you're into that, and then we have Bananagun and Maga. And again, we sort by volume. We also have Mog, Maga, Pepe, that's about it. You have Apu, Wojak, etc., a few other ones that are smaller. So I think it's very clear. Out of, let's say, the top 10 on-chain coins on Ethereum, 2 of them really stand out to me: Pepe and Mog. These two both have top 10 on-chain liquidity on Ethereum and top 10 on-chain trading volume on Ethereum. So very simple. If you're looking for Ethereum-based meme coins, Pepe and Mog are your best choices right now. Okay, before we wrap up, I want to note a couple data points that I will be heavily monitoring for the next few months to see how the Ethereum ETF performs. So specifically around the split between Bitcoin and Ethereum demand. So think about if you're an institutional portfolio manager or a fund manager, are you going to be deploying similar amount of money into Bitcoin or Ethereum, or will you prefer to deploy money into Bitcoin versus Ethereum, or will you actually shift your portfolio, taking it out of Bitcoin and into Ethereum? I think these are all possible scenarios based on the institution and what they're looking for. So this is one that's very interesting. Will people be max bidding Bitcoin only, Ethereum only, or a mix of both? Number 2, will staking ever be added to these Ethereum ETFs? And does not having the staking reward be a big hindrance for institutional adoption in the next 6 to 12 months before they actually come live? This is also very important. And number 3, with the inflow of institutional money into Ethereum ETFs, can these demand actually drive up the Ethereum ecosystem and Ethereum related altcoins, DeFi platforms, and maybe even NFTs? I think this is still a big question that's up in the air right now. So this is why I'm not yet max bidding all of these altcoins we have mentioned, but if we see signs of interest rotation into Ethereum ecosystem, then these are some of the targets that we are closely watching. Overall, the Ethereum ETF will be a very positive thing for the entire crypto space because it will lift majority of the prices up, not only from a liquidity perspective like the demand for Bitcoin has brought, but also because it will bring a greater acceptance for these smart contract based platforms and DeFi-based platforms for the traditional investors. Once Wall Street can fully embrace having Ether as a portion of their investment portfolio, then we can talk about much more in-depth types of investment into the long-tail assets in crypto. So having that understanding of Bitcoin as a store of value versus going to Ethereum as a technology layer, a world computer, or smart contract platform that can create all types of assets and decentralized finance, this is a big jump that I'm very happy to see the US traditional market actually coming into. Okay, that's it. That's everything I have prepared for this video. If you like this content, make sure to give it a thumbs up and share it with a friend. And let me know if I have gotten any data points too bullish or too bearish on the Ethereum ETF launch. And if you enjoyed this content, make sure to follow me on X at VirtualBacon0x. This is where I drop day-to-day alpha as I'm doing research for these in-depth videos. And make sure to join our Discord with the link in my bio or go to discord.gg/virtualbacon. We will be revamping our insider trading community with a full educational platform with courses and more signals and other traders coming in to discuss and help mentor the community in this second half of the bull run. So stay tuned, a lot more to come. That's it. Thank you guys for watching, and I will see you on the next video.